Good morning, everybody. We are back with you for planning and scanning. It is Tuesday, of course, the 21st of January. No major announcements except for, of course, next week I'll be in Orlando at the Money Show. So for those who are going to be up there, we look forward to seeing you. For those of you who are going to be trapped, apparently there's another snowstorm, another Midwest and East Coast storm coming out, so maybe now's the time to reevaluate real estate property investments in a condo in Florida, become a spread trader. Sell short the north and go long the south. All right, so we walk in this morning, and the first thing we see is the equity markets are up. We've been in a kind of a choppy range as the market's been trying to find its personality. The chart's on the top of our traditional look-see with our 5 major indices. We have the S&Ps, the NASDAQ, the Russell. This is the spot New York NYSE, and this is the Dow futures. I'm using futures except for on the NYSE because I can't. And the bottom is just a representation of the weekly chart. So when we take a look at this personality here with the advanced decline analysis, we do see that the only market that really has had a major breakaway is the NYSE on a week-to-week basis. It is broken out to the upside. It shows that there is some strength in this market, but it has been, I guess the intrepidation is that, the market's not really, it's got a little bit of divergence on volume. So in other words, we're not seeing a really strong upside move. What might explain a little bit of this, and I was hoping to see a test of the bottom end of the trading range as we get into this week with a lot of earnings today after the bell. If you click on, well, you probably see it already, the announcement tabs. As far as economic reports today, it's going to be fairly light, a little weakness over in Europe, and it really hasn't had a big effect on the market. In fact, what really had an effect was that the Chinese reports that came in Sunday night, weren't as bad as what people had expected and prepared for last week. So with that said, today's earnings, Delta, we have Verizon. Verizon had a good beat, and Johnson & Johnson had a good beat. After the bell today, you've got IBM and Texas Instruments and Cree, and I think there's AMD as an Intel competitor with the semiconductors. So looking at the market here, and I'm trying to look at sectors that end a seasonally strong period of time. And one of the sectors that end a seasonally strong period of time, believe it or not, is the IIX, the internet. I'm going to get into that in just a minute, because in some of my trading courses and our research shows that there are certain times that you see strength in the market in certain sectors and certain times of weakness. And this may be what we're going to be seeing is a sector rotational correction still in the marketplace. Last week we had made this, early in the week, we were looking at this multiple personality of the market, its inability to take out the high, where you had the high in the NASDAQ, you just briefly made a high close in the Russell, but no follow-through. And now today, now that the weekend, the 3-day holiday's out of the way, and you got earnings that are showing a little bit more progressive performance, like i.e. Verizon and Johnson & Johnson, this is a scary thing. Last week on Friday, I was buying because we were looking at a potential low-close doji in the NASDAQ, potential low-close doji in the Russell, and thinking that the market was showing some signs of tiredness, or at least a test back to the bottom end of the range. We likely bought some TZA calls. I will be probably, most likely, after the first half hour or so, it's going to open up strong and look for a pullback and get out of those. So I just want the world to know that, and I'll be talking about that with our trading room. The reason is because of the fact that this market continues to surprise to the upside. And if this is going to be a continuation pattern, we discussed this last week, and that's why we have this little line here. And if we had broken out, we could possibly see, and we not only broke out, but the market on Friday did not get back down below this level. And number two, we're seeing just overnight strength in the marketplace. I believe that this is a potential for if this is an AB or a bull flag formation, it will measure considerably higher. And so therefore, with an option, get out. It didn't move in accordance to plan, get out. Now, looking across the spectrum of the market, every one of these indices on a weekly basis still show resolve to the upside, but the sector rotation that I'm talking about. So I want everyone to be kind of aware of this, because not all stocks are created equally. And the stock sector that might form typical weakness is we're going to be looking at computer technology index, number one. So when we look at the computer technology index, as you can see, I wanted to bring up a weekly chart for you. This is a very strong, coming into the end of January, middle of January to the first week of February. This is a sector that it not only did it have an amazing move since, I guess, the low of 2009, you could say, but even in the last, since October, this index has just exploded, no pun intended, but the computer technology space traditionally starts to see seasonal weakness right now. So the components in the XCI, we want to look for that, number one. Also, looking at, and I've talked about this before, IIX, which the IIX is the internet. Now, I've given seminars, and we've done, together, we've seen all the, I've listed, and I've got slides that show the top performers, and you can certainly do that yourself later for just so that we can get through today's session. And I got the wrong. Here we go. Nope, not it. Bear with me. No, it's the IIX. It's the internet, and I'm not sure why I'm not getting it up here. I'm just not sure why I'm not getting it up on Genesis, so I'm going to bypass that. IIX, I'll type it up for you. It's the internet index. The next area that we want to look at, that these two sectors start to lose seasonal strength, but what we do see for seasonal, lose their seasonal strength, the computer technology space, after this earnings season, we might want to take a look at some of the positions in here and start to look at some scans on weakness or for some short positions in that space. For looking at the metals and miners, typically gold ends its seasonal strength, and since gold's been on a decline, as you can see here, going into right around the third week of to the middle of January, seasonally speaking, got to be on guard for seasonal weakness in the gold market. And so that might put a little bit of pressure on some of the gold miners. In addition to that, we have strength that goes and enters in this time period, energy in the next 2 weeks. So let's take a look at USO real quick together. So as you can see, we bottom out right around it's almost the very opposite. So looking at the OIH, oil service sector, we start to bottom out in November, then it pulls back, and then right around, again, about the middle to third week of January, we start to see strength coming into the OIH. So there could be a little bit of this sector rotational pull, and we need to kind of watch that theme and that theory for this week. So if we start to see a lot of the top tech names. Now, these are weekly stocks that generated a list of low close dojis last week. So obviously, if we see anything in the computer tech or internet space that pops up on a screen, and so for last week, we really didn't see anything in that space, as you can tell, that generated a low close doji. So let me go over here and take a look at anything that generated a weekly sell signal, just a plain old weekly PPS sell signal. There we go. And as you can see, we're going to consumer discretionary, staples, energy, financials, healthcare, industrials, information technology. Nothing so far generated a typical weekly sell signal. So last, we need to watch on a daily basis. So you guys that are running scans with PPS, short stock daily, we didn't get a lot of sell signals last week. And the ones that we did in the consumer discretionary, of course, Best Buy, Darden, etc., consumer staples, some of these names, but none of this areas that we're looking at right now, except for information technology. All right, so now let's get down to business. Nothing, as you can see, on a weekly basis generated a sell signal. However, as we look into a daily sell signal, we are starting to form, and we want to look at, if you take a look at this stock, which is Computer Science Corporation, it has earnings out on the February 3rd is the next release for earnings. And as you can clearly see, right after earnings, it makes its annual peak in this particular stock. That's an annual peak. And it just, so the best, strongest period of time is from October going into mid to early February, Computer Science Corporation. So looking for some of the names in that space. ADP is another one, and that's kind of interesting because it has a lot to do with employment. So what I'm trying to look for are names within that space, information technology, and look for a lot of the similar names that come up with a similar pattern. And if they all show that they have been, number one, overbought, number two, we might just see a great trading opportunity here in this space to look for some seasonal weakness, especially if it's got confirmation and corroborated by other names in the space. So it shows that it's just not one stock, it's the sector that they're probably liquidating. This is just in the last, since July, from 63 to 99. This is Cognizant Technologies. The funny thing is, in planning and scanning in last year, we tried to get into this stock, and it never pulled back. If we missed it, I think that was one of our misses by pennies type of name. But I like Cognizant Technologies. But right now, Cognizant is it starts to creep up and make these higher highs. The highs are getting less pronounced as prior rallies, right? And so Cognizant Technologies, we'll be looking for a scan, and I think this is one. The problem with this space, number one, is that we got to look at individual stocks. We got to take a look at individual stocks if they're optionable. We got to watch for the earnings when they come out. But I think that it gives us a sense that if we're starting to see more and more names on a daily basis, so like today, you want to start focusing on scan on information technology at the end of the day. Tomorrow, the same thing. Because what can happen is we get these scans, and I've showed this time and time before, where funds, if they're going to start to lighten up a position, they don't get out of all the stocks in that one sector at the same hour or the same day. They take some off of one, another, and another, and then by the end of the week, or maybe the middle of the week or the middle of the next week, you start to see that sector generate a sell signal, and the next thing you know, it'll be on the news. Hey, this sector just really broke down. This is semiconductor space that's in the information technology. I'm not more interested in information technology of semiconductors. We got to be kind of specific, but as you can see, even this space, it still stays strong going into April. So what it is that we're looking for is that we're looking for data processing, we're looking for computer technology, we're looking for hardware, so maybe a Western Digital, WDC, would be a thought. So Western Digital, as you can see, coming into the beginning of February, has a little bit of sell-off, but then again, it rallies back in May. This Western Digital is another stock that popped up on our radar, and someone said they make crappy hard drives, was what the post was. But whether they make bad hard drives or not, they still had an enormous move to the upside. But I think that this space might be running a little bit out of steam, a little out ahead of itself, and so I think that's where we're going to see the potential. If we are going to see sector rotation, we come out of some of these computer technology names, and course, one name that might pop up on the radar screen. And look, right around February, it definitely has not an annual high, but it also weighs in on a seasonal, is Microsoft. So Microsoft's already been in a weekly sell signal, and I think that is one of the names that I think Microsoft, if we take a look at Oracle, for example, and I know that Oracle was really heavy in the news because it had a big move last couple weeks, last month in particular. But look at what happens to Oracle at around the middle of February, right there. Another stock that's had an amazing move to the upside, but which even last year, I think this could be a great candidate for if Oracle is an optionable product, some credit call spreads, and that's what I think we ought to be looking at. So with that said, this is some of the names that I think we ought to be, or the sectors that we ought to be looking for, that we're going to start to develop a sector rotational or maybe asset reallocation. I mean, maybe they get out of enough, but they certainly won't add to the positions, not with that type of seasonals. And if you start to see some technical formations of weakness, lack of volume at these highs, and that's what this is indicating, lack of volume at these highs, Oracle might be one that has gotten a little too rich in its pricing. Now, for Oracle, it does have weekly options. February options expire in 31 days. Looking at Oracle, we'll put together a plan as we talk about it this week. You guys can do it on your own. Planning and scanning is about to say, is traditionally about to say, hey, let's focus in on these areas for this week and in the coming week ahead. The other area that we see coming into strength is, again, the energy space, which we've already mentioned. And then, of course, we've seen some names such as today, Halliburton comes to mind, Schlumberger the other day. So the names. So we take a look at the, when you take a look at, like, for example, a Halliburton, at the end of, it's had this nice run-up. There's no doubt it's had a very nice run-up in the market. And it's had a pullback coming in here. And this is one that might see some continued strength. And what we want to do is take a look at SLB, a competitor in the space, right? And a very similar pattern. Look at these long shadows in here. And again, it too has a seasonal move to the upside. So this generated, by the way, Schlumberger generated a weekly buy signal. So I think you might see some of this sector rotation, and that's what might keep these indexes up for a little bit while, at least going into the second, third week of February, which is what I'm, a kind of a Gann and anniversary type of, if there is going to be a major correction in the market, it comes in the third week of February, right after that Valentine's Day weekend. I'm not going to call it the Valentine's Massacre, but that is the week of, like, February, beginning 17th, 18th, 19th, somewhere in there towards the third final week of February. That's some of my longer-term cycle stuff, and that shares that we might start, if there is going to be a correction of any decent 3, 4, 5% coming in the indexes, it might come in there. But between now and then, folks, I think we're going to see some sector rotational pull, and money's coming out of the IIT and possibly going into the energy space. So that's one of the areas that I wanted to cover. As far as looking for new stock buys, last week also we talked about Kimco. Looking at the short stock, I think the consumers looking at this week's big sell signals. We had one that came in Discover Financial. We have, if you take a look at MasterCard formed a weekly low close doji. So the only saving grace was looking at American Express, but basically it had a daily high close doji. 3 days later, it just popped to the upside. But this could have put in its little last hurrah. It definitely sees some seasonal weakness going into March. So this space could be an area that we see a short-term correction in the consumer financial space. And if you notice, look at American Express. That's I mean, all this work all month long, and all it's done is start to form a doji. So you also have one other name, which would be Visa, and of course Visa has just did not give any signs of a sell-off. In fact, Visa bottoms out at the third week of January, so I can't imagine what this thing's going to do. Resistance at 238. But I would pay attention to MasterCard this week. If we do see, I'm going to say that I think that this particular stock, because the seasonal suggests that we can see weakness going into the month of February, I'm going to be looking at a rally and to see if possibly we can get maybe one more test up here into the 840, and I'd be looking at if we can for some credit call spreads or perhaps some out-of-the-money puts. We've got a heck of a gap down here in the market that eventually will get filled. So this is a stock that, as you can see, this orange box in here, obviously I liked it last year. We liked it last year. Right now, I think it's gone a little ahead of itself for MasterCard. Looking at other names in this area, Hess. Now, here's the funny thing. We just talked about the oil sector, integrated oil and gas. We start to enter a seasonally strong period of time. So is Hess, as we get into this time period, Hess actually is in a seasonally strong period of time. So even though we're down, this might be a buy if we get down to 75. One of the names that I think that I found to be interesting, a short stock signal, was a low close doji and a weekly sell signal, was Hog. And that would be, of course, Harley-Davidson. Harley-Davidson had an amazing run. I'm not sure that they are going to continue to sell internationally as well as domestically parts. They've got a great model, but it certainly is an interesting stock. They have earnings out on 130. So this is giving us probably any rally up to around 68, a buck higher, up here against these highs last week. I think that might be a consideration as we start to unwind, and I think that this stock is one that's definitely got some unwinding to go, and I'm going to say I think we could easily see a pullback, a $5 move, and that's Harley-Davidson. Intercontinental Exchange, wow. I mean, last week, and you take a look at the competition, which is CME Group, big struggle here. And if you take a look at CBOE, for all the exchanges have been kind of a struggle, which is unique because, they really don't see that type of sell-off. So it's kind of a hit or miss of which stocks that we want to be looking at. As far as buying opportunities this week, there weren't a whole lot. What I do like is the fact that we had Avalon Bay, which was on our list of stocks that we had given out in residential and commercial real estate investment trusts. This is a sector between the XOP, energy, real estate investment trusts, and utilities, believe it or not, because energy consumption is going to start to increase, and especially as we see an increase in fossil fuel with the effect of the seasonalities coming in with crude oil. This, I still like this sector. So looking at last week, we talked about, we had that nice high close doji, some follow through, Kimco, still liking this group here. Looking at Schlumberger, which is in a weekly buy, and it's entering that seasonal strong period of time. As you can see, 125, then we go up to Feb, and then bang, Schlumberger going into May. Kimco actually showed up on our list of stocks, but we had picked it out the prior week. So I'm still liking Kimco. I'm still liking the fact that we've gotten several names, wrong click, Avalon Bay, for example, and in that space, we're starting to see not one name, but several names pick up, and look at that volume, man. That was like in 2 weeks, just a nice surge and a crossover of the moving average. So I think for, this is a $120 stock, it might be a little too much for people for this particular room, but looking at the fact that we are seeing some money coming into this area. I think here's EQR, which was on our list as well. And I think that, from a seasonal perspective, it really doesn't even start to really participate until February. But this is a stock that, look what's happening here, a monthly buy signal. They're starting to say, you know what, perhaps if the last bastion of growth is going to come from commercial, if everything's starting to heal, then this would be a good spot to look at. So for this week, we want to be focused in on overbought conditions, number one, in internet technology, the IIX and the XCI, computer technology, number one. Number two, we want to start looking for buys coming into the energy space. We'll be talking about that, so I wanted to give that a little bit of insights for you. And now let me go over to some of the commodity markets and briefly give it a look at. UNG trapped in a major range. UNG might get a little boost, but if you notice here, look what UNG does. It actually has no seasonality until you get into April. So I'm not really interested in that seasonality. There's not a huge amount of volume in this market, but I will say this. Do you see how the market kind of has this little uptrend here in UNG? It also is, no one's interested in selling UNG either. So you better be focused on UNG is actually attracting from a daily perspective and a weekly perspective. It is starting to pop. So perhaps natural gas and the utility sector is starting to pick up some interest in the marketplace because they are not at this 1, 2, 3. This is a weekly chart. This 3-week sell-off came with hardly any liquidation in volume. So the fact that it's not in a seasonally strong period of time, that's just saying there's not a lot of interest, but that doesn't mean they're selling this market. So we want to keep focused on UNG. When it comes to gold, we did mention that gold enters now a seasonally weak period of time. In our room and on a video last night, I'll tell you what, and I know that we've got a couple big numbers, but if we break this 1225, but I think the most important number is right underneath monthly support 1216. If we break 1216, I really can't see how this chart looks pretty in any sense of the fashion. You have this rally which started from 1219, so take a look at the rally. From 1219, prices go from 1195, you got up to 1262, you couldn't close over 56, and there's no volume associated with the gold market. So on the upside, they struggled to go up. If that was the bullish time, I mean, folks, this is the bullish time for gold. Look at the seasonality. If that's all they could do in the bullish time, what are they going to do this thing when it turns bearish starting on or about the 18th to the 25th is when it makes its annual high. Annual high. Not seasonal, annual high. So if this is the time frame, I would be particularly interested in seeing if we break below these levels, and if we get a cross in on-balance volume, this decline is met with an increase, or if volume starts to accumulate. Folks, this is not a buying opportunity. You'll be seeing gold a lot lower. So looking at the overall market here, the bond market, real quick. The bond market is trying to form this little W formation on a weekly chart with this double bottom here. With the way the bond market was acting strong the other day, I was suspecting that we would see a little bit higher prices. We actually thought we would get more of a correction in down here. It never even happened to the upside, and so bonds just kind of moved a little bit higher. The fact that equities are up, the fact that bonds are up, I think it's important as we go through here to look at the seasonalities of bonds. Bonds typically, look at the seasonality of bonds. They go down. So bonds are not really conforming to their seasonal tendency right now. And I think that one of the things that we've got to really be kind of aware of, this number up here around 132, any test up around 132, and I think you got probably, even it shows up right in here, 132, top of this range. I would be watching for TLT. or you could do the inverse TBT, and we'll be taking a look at that. But watch for this week that one, if there is any strength in bonds, if it does have a test, 132 would be a formidable number. And I bring that to your attention because that is as you can see, that is my quarterly number. The monthly number is what some people will be looking at and they'll say, oh, it already blew up there. But there's a lot of 132 would be the next area of test of resistance. And if it blows through that, this is forming a double bottom and a W formation. And I just can't imagine bonds going much up. So we've covered the equity markets. We've covered different stocks and different sectors. And as far as any new trades for this week, we do get something. We're going to be running these scans every day because we just come off a 3-day holiday, and I will be sending those tweets out, and we'll be posting those. So if you're not familiar with the tweets and how it works, it's real simple for those that join us for planning and scanning. Just go to Person's Planet. I'll share that with you right now. Bring that into the mix. Just go over here to tweet. I'm trying to balance the budget here, balancing my time, balancing trading, and sometimes we are a little behind. But I got all my good friends in the room, which would remind me of that we're going to definitely send out these tweets. So if we talk about something like we still have a play with Sears, we still have a play coming in the third week of. We still have a play coming into the third week of this month, which is the end of this week, for a seasonal buy in Sears, believe it or not, a seasonal buy in JCPenney, which everyone heard on the news last week. They're going to close a bunch of stores, 33 stores, let go 2,000 people. But as long as they don't file bankruptcy, there's a very strong chance that we could see, and I know it looks bad right now because it always looks darker at the beginning of the tunnel, but no one can really see that light. But from a seasonal perspective, I think that these two names really could come out of here as a low risk number one and a high probability seasonal play. So I'm still interested in those two names by the end of this week. That's when we get that. So I just wanted to remind everyone there. All right, that concludes today's planning and scanning. And again, for those, we generally see people have sent in requests. Hey, what do you see? Can you go over the seasonals for this? So if you are a visitor, or if you have interest in certain stocks for planning and scanning for this week, all you got to do is just send us an email and we will cover that. I definitely had an interest in a couple people that said, hey, what's the seasonal sectors that start to break down? And I thought that would be really nice to say, okay, it is January. What's the time frame that we begin a seasonally strong period of time, but also finish a seasonally strong period of time? So if you finish a seasonally strong period of time, you're looking for sell signals. If you're entering a seasonally strong period of time, you're looking for buy signals. So anyway, the seasonality, I'd also make mention that healthcare providers in the RXH, so all the healthcare providers, and I'll just conclude with this. And I can't for whatever reason, and I'm not sure why I'm not getting that, but I used to be able to, and I'll look into it. But the RXH is another area, the health-specific healthcare providers, so like Tenet Healthcare. So as you can see here, from on or about January, you see that seasonal weakness. Healthcare providers. So, and that might be really a tough one, Kindred, KND. You could see it as we start January, gets a little bit of a spike into February. Healthcare providers might provide an area that we start to see that that rollover. So there's a lot of names out there that still is going to provide perhaps a sector rotational pull in the marketplace. And so just wanted to provide that with you guys. And then again, at the end of the day, we're going to run scans, especially I think the focus here for some sells is since we've had such an amazing run in the technology space, right? And I mean, this is the NASDAQ 100, an amazing run. And, you know, typically it's not until the NASDAQ 100 has its seasonal. But let's take a look at here with me a second. Hopefully we can get this symbol up for you. I'm just going to add so typically around the third week, NYSE, that's the NYSE, we typically see a little bit of sell-off, and that's this particular week. When we take a look at the seasonals on the NASDAQ 100, one time, just to speed things up for you guys. So you can tell that even the NASDAQ, from on or about the beginning of January going into March, has more of a seasonal decline. So any further strength in here, I think we want to be more specific in stocks in the computer technology and the internet space that we might want to look and run for scans for daily sell signals, and that's going to be my focus for this week. Okay. So with that said, support and resistance targets, S&Ps. Obviously, we're now trying to take out and trade the December 31st high. So at the end of the day, or the first hour of the market, we had this little, I don't count this as a doji in the S&Ps because the markets were truly closed yesterday, but I still think that based on the volume levels, based on the first hour of trading, the Dow is, if you take a look at the Dow, it's come off its highs pretty significantly. And I think that by the end of the day, the first hour of trading, if you've gotten back underneath, and I don't know if it's possible, but man, I'll tell you what, if we get, let me change this over to an hourly chart because this is good for day trading and swing trading. And this is a good setup because this is something that I'll be looking for myself for today. So I might as well cover this real quick here with you guys. All right. So on the first hour of trading, we'll see if the market there's two big numbers that I would be looking for the S&Ps. If we get underneath the opening range, this is the last, as you can see, a PPS buy signal. This is the last conditional change. If we get underneath that low, so it's 1839 3/4. If you have a full reversal and you close underneath that low in the first hour, then I would imagine that this market's going to be just right in that kind of a trading range. So I have to watch for that. So I want everyone to kind of focus in on this number right there. It's 1839.75. If you figure in an hour, they're going to try on a higher opening, take out the 46. And if they can't, and they not only get back below the opening range of that bar, but then get down beneath the low of the prior hour, which is the last conditional change, then I'm looking to go for the short side of the market. Anyway, that concludes. Also, we are building up a little bit, if you can see here on stochastics. It hasn't truly formed because the bar is not over, but we are starting to see a little bit of bearish divergence in the market here on a stochastics basis. That's what I'd be looking for in the first hour for today. I'm also looking for this week for continued weakness and daily sell signals in the technology names, and I'm looking for buy signals in the energy space to start to build a little bit of a portfolio there. I hope that helps everybody out. And again, any specific trades, we will send those out and tweet those. Thank you all very much.